So, good morning, everyone. Hi, Steve. Hi, YouTube. I hope everyone is fine. Ah, good morning, DJ Pro. Oh, wait 1 second. Okay, sorry, test. No, it's fine, right?
No, it's good.
Okay. So yeah,
Thank
again,
you.
hi everyone. Welcome to this beautiful Wednesday, the 22nd of July, 2026. So I hope everyone is fine. Let's start the show. Steve, how are you? How is it going? What kind of news do we have?
Yeah, everything's good, Henry. Midweek, always prepared each trading day, my friends. Hopefully, you are as well. Remember, you guys, this is before the bell. So we are identifying, key impulses, key levels, support resistance, and also some good risk headlines incoming after the bell, which is what we got today, Henry. And what do we have today after the bell? We have President Trump speaking again. This either addressing the nation, he's back on tariffs, he's hitting my country again, Henry. So there's
What else? What else? I mean,
it's never boring. There's always something going on. Whether it's about we got a lot of forest fires here, it's affecting the states, a lot of things that affecting both things because we import export with each other a lot of industries, especially with the EU. And yeah, he's just having plans to double down on the tariffs. So I don't know if he's addressing that or other issues, because of course we have war headlines that are coming out all over the place, Henry. So what's your take? What do you think Trump will be speaking about today at 3 p.m.?
I have the feeling we talked about a couple of weeks ago that he speaks every other day. So to be honest, I guess that all the nations are ungrateful that US is doing all the heavy lifting and in the East. I mean, nobody asks who started the whole thing, right? But nevertheless, the US is doing all the heavy lifting, so nobody helps them, and therefore they want to be compensated, to get compensated for the amount of work they're doing. So I think it's gonna be in this regards. I mean, we had the passing like what's his name? Doesn't matter. I think he will just it will be nothing fancy because do they really want to go to bring boots on the ground in Iran? I mean, not US themselves, right? Because if they do that, it's going to be like Afghanistan, Iraq 2.0. So that will not make any sense. Considering what I have read is that they're trying to find some middleman, like Syrian, Iraqis, whatever, that they go in, but it's like suicidal mission, right? So it's hard to find people who are stupid enough to do that, but you never know. No, that in that regards, I expect nothing again, right? And I don't care that much because all I care, again, we always talk about the impulse. All I care is about the impulse itself, which way does it goes, and then afterwards I process the information. Is it something that is lasting, or is it just some short notice kind of thing? And this is the only thing I care about.
Yeah, of course. But the reaction is it bullish, is it bearish? But what we do know is if the boots enter the ground, Henry, then we know volatility is going to kick up. We know VIX is going to go crazy because we haven't had like a big event like this in a long time. And also the Iranian regime isn't some small regime. There's like 90 plus million people. So it's big country, big territory. And of course, yeah, from human aspect, we don't want that. But from a market aspect, if that ever happens, then expect some extreme volatility.
And maybe just one more thing for some people who might not be familiar with the topic. Just open up the map, Google Maps, whatever, Open Maps, whatever you use, Bing Maps, and look up Iran and look up the terrain of Iran. It's mountains everywhere. So it's not that you can just push through. It's going to be basically, it's going to take forever to fight your way through. this kind of terrain, and that's the reason why they did not attack. It's my guess. This is the main reason why they did not attack Iran much earlier, because it has been always sitting there on the table, but nobody was suicidal enough to do that. So we will see. But I think I cannot imagine it. I mean, to be honest, I really cannot imagine it that you would put on the ground there. But hey, it's 2026. We are only halfway through. So given everything that has happened that year, it would not surprise me if something super fancy happens where you would say like, all right, I would never have thought about that to happen. So never say never. And this is what I mean, right, guys? This is what Steve and I are talking all day long about each time we stream, is don't have an opinion. Be aware of things that they can happen, and then just wait for the market to show its hands, because you don't know. Nobody knows. Only there's a small circle of people who knows, but it's maybe a handful, a couple of handful. Actually, now is I don't know, some funny news. You can get a subscription for Truth Social to get the truths a couple of milliseconds or a second earlier than everyone else. So it's like no, but I mean, if it's like attached directly to high frequency trading algorithms and to the exchanges, right, it makes a difference. So you can. It's like I didn't check it out, but from what I've heard, is like $100,000 or something per month.
Oh, really?
Subscription.
Wow.
Yeah, something like I mean, it's for the big guys, right? It's and so yeah, just some nonsense on the side. All right, let's shift gears and talk through the topics. What is a part of Trump talking? What else do we have?
Yeah, I just quickly want to note, Henry, because on the calendar here we have Trump speaking. So, just expect some comments on trade policies, tariffs, because tariffs is back on the table now, and just the economic agenda, going forward. So just expect those comments, because you never know what's going to come in. But now that tariffs are back on the table, it's going to shift things with indices. Any notes on with China, with financials, any risks on the dollar? So always keep in mind the DXY on your charts, also the 10-year yield that can be affected as well once he starts speaking. If you guys are still trading, but remember, if you guys are finished trading, then don't worry about it. Shut off the charts, shut off that Perdia broker with the prop firms, with Perdia, whoever you guys are with, and maybe just observe. If you're really worried or interested, then go on X. Plenty of people will be posting about it. Maybe I'll be posting about it. Maybe Henry, just our own opinion about it. But then again, you guys, this is a neutral opinion. Also, the World Cup is over, so everyone's opinion about the World Cup is over. Spain won, Henry. Everyone can be happy. And because it was.
Did you? I mean, I did not watch the World Cup, but I have seen a short clip of the celebration of the final celebration. Like, is it?
Of course you did. Of course.
But just like the 10 seconds, is it really the case that they were not able to get him out of the?
He would not move. No, he's like, I have the power. This is my country. And also, I saw a post where because they U.S. profited huge amounts of money on it. Huge.
I can imagine it.
So Trump was saying, you know what? If you guys need a host country, we are definitely number one on the list. Bring it back to the U.S. We will host it again, Henry, because they want it. It's funny.
But the video itself was so funny. No, but I just want to say, guys, if you have shut down your platform and you're done for the day, if you really want to see something funny, just watch last year tariffs discussion of Trump where he was like, I don't care about the stock market. No, I don't want stock market at all. And then like the whole thing went nuts, right? Like straight line down 20-30%. And then all of a sudden shift gear. No, stock market super important. Yeah, we need we need it. And like we're gonna double it. So something to be aware of, right? That the opinion can be changed easily from one day to another. So and this is also what you need to do in trading, right? Don't have a bias. Bias is what kills most of the traders. As if you see the market doesn't want to go through a level and it's obviously bounced, and you see the other markets go in the same direction, either up or down, it doesn't matter. But you see, all right, the market was not able to go through. Then don't fight it, right? And this is the thing I see all the time. Always be the case, always will be the case that people are just sometimes too stubborn to change their opinions.
Yeah.
And so, yeah. All right. Maybe one more thing in terms of news. I think currently we have the earnings season, right? So
Earnings,
everyone
I
is
was going to mention this.
so yeah. So everyone is focused on tonight after the close, Tesla and Alphabet announcing, so Google announcing their numbers. So be aware of that. And again, some of you are asking, why do we care about hyperscalers or big tech? Well, guys, almost all of us and you are trading NASDAQ. And so those things, they shape the narrative, they shape the direction. They are making a big, like they are actually the biggest part of the NASDAQ. And so if they move, the NASDAQ moves. And this is all you need to know. So it doesn't matter what's fundamentally happened with those companies. But if you see there's a shift, and it's, let's say it's plus 10%, and there's euphoria again, and all the big tech stocks, AI stocks are moving up, then it might be a better idea to fight NASDAQ to the downside, right? Just join the wave to the upside and ride it. And the same goes other way around. If you see market drops, like a stock drops 12% and everyone else is following it, then don't be blindly bullish. And this is what we try to teach you with Steve every day when we are streaming live, that therefore we're talking about correlations, we're talking about different markets, different time frames, big picture, market impacts, and those kind of things. Why? Because it matters. And it's not about just the chart itself and the price itself. It also gives you a completely different conviction once you understand why this move has happened. Is it something just short term, or is it something that has power behind, right? And again, if you scalp for 10, 12, 10, 20 ticks, it doesn't matter. You basically do your own thing, and you can completely just close out everything and scalp. But most of us are, even I back in the days, trading for bigger targets, 50, 100 points, sometimes 150 points. And then those kind of moves, impacts do matter. All right. So, Steve, back to you.
Yeah, I just wanted to say, you guys, if you're holding any positions into the close, into the post market, then expect some volatility. As like Henry mentioned, we have Tesla earnings and we also have Alphabet, so Google earnings. So we have two big heavy hitters incoming. Just quickly, let's look at the path of Tesla since last earnings. So look at this. We're just right back to break even. Right back to break even. Very interesting. So we popped about, since last earnings, back in April, Tesla went up about 20%. And what was the path? Where, we came up, we saw some resistance from previous earnings, and we came back down. So you could see that Tesla is back down to break-even territory. Nothing major has happened. So the question is this fair value, and we gap up and head towards new highs, or will we see new demand areas below where we could possibly close this gap? Back in September, actually, no, sorry, Henry, we closed the gap. We closed the gap from September.
I just want to say it looks like a gap close, right?
In these areas, and the reason why we talk about gaps, because you could also use this in NASDAQ and indices, and the gaps won't be as aggressive as the stock market, but price tends to go back to these areas for a reason, because it wants to retest it. It wants to see, okay, there was strong pressure in this area. Let's go back into it, see if the buyers and the sellers will step back in. So the buyers step back in this gap in September. We popped it back up. So sometimes this can tell you what could possibly happen, give you some ideas for the future. So this is where Tesla's right now, back to break even. Let's quickly look at Google, Alphabet coming out with earnings as well. And what happened here since last earnings? We're back to break even. Same thing, Henry. We gapped up on earnings last call. We closed the gap about 2 months later, back in June. And now Tesla's same scenario. Very interesting, actually. Same scenario as Tesla, where it's back to break even. So,
yeah, I mean, that's a perfect case for high evaluations, right?
Yeah.
what do you want to do at this height? Like you need a perfect word, and sure, if everything quiets down and NQ is just drifting up, then those stocks will also just continue drifting up. But for the time being, as long as and we're actually sitting. I mean, if you go on, can you click on NQ? If you click on NQ, yeah, you see it's basically the same, right? It also went up in April and then sitting at the top.
Yeah.
And as long as that's the case, it needs to find its way, right? One way or another.
Yeah, look at this gap closure as well. Back from Tuesday, May, and you know how it is, guys. Indices, they hit the gaps, especially in indices when it's the most efficient machine in the world. And look at this beautiful, perfect gap close that we actually got a few days ago, and I didn't even realize it, Henry. But yeah, we didn't stream on Friday, but if we spoke and had the stream going on Friday, we definitely would have talked about this gap closure, and this is what we got. Perfectly to the tick. This market's want to be efficient.
I have been actually thinking about it, about the gap close. I was like, we would have definitely spoken about it, especially the perfect V-shape pullback from the gap, right?
Yeah.
Like a really amazing piece. All right, let's shift gears. Do you have more? Otherwise, I would go through the big picture.
No, that's all for today. So yeah, guys, Trump speaking, and then we have 2 earnings calls post-market, so expect volatility at those times. And that's all we have for today. And also remember, any surprise impulses could come really at any time, any point of the trading session, especially post New York Open. And we have New York Open in about 13 minutes. Henry, so yeah, you can go ahead.
Time is running. Like
time is running, but we have so much to talk about. It's been a few days, Henry. Come on.
Yeah, it's crazy, right? All right, guys. So that's a beautiful picture from Friday. Let's clean it up. So basically, we have been looking at the 30,000 zone here, and those 1, 2, 3 were basically the touches where I said on Friday. All right, as this is my current resistance level, right? And here we have been talking about those areas, basically the support area. Just a quick reminder to you all what we were talking about. And yeah, basically we're still sitting within its range. Our picture though changed a bit. So we had this bullish flag. We have broken out from it, retesting it more or less. And actually I just deleted my support resistance area here. So for the time being, as long as this stays intact, it's actually still the 250 level. So some things don't change, plus minus. Okay, we can update it to 29,300. I don't care. Again, guys, it's not a precise math here. It's more about our big picture thing. So what's going on? The support kept its strength. So support is still support, right? Upwards momentum, and the range is still intact. So what can happen from here? Well, this upwards trend line, if it holds and the market stays, let's say, in this area here, shops around, then I would just move this like this, and it's still a bullish flag, right? A different shape one, but still a bullish flag for bullish case. So therefore, I'm not a big fan of this rising trend lines, because many times they're just getting chopped around. And I personally prefer them more if they are being touched up a couple of times. So the price have reacted to them at least like 2-3 times. But yeah, but that's the importance. It's also more to showcase you how you adjust those things in real time, right? It's not that you see it 2 weeks later and you're, oh yeah, that looked like this. But then if you walk it through candle by candle, you see actually how it develops. And so you need to readjust your ideas, right? Okay, for the time being, range 29,300 level, 30,000 level. If we go above, it's bullish. If we break the support area here, 28,500, let's give it a name, 28,500. If we break the support area, then it's a short for me. But for the time being, we're sitting right in the middle of the range, right? That's what I would see. Let's zoom in. 15-minute chart. Yeah, it's a range play, right? The price is all over the place. So personally, not my favorite kind of trading. But
So, what is your favorite, Henry? Quick question, then. In a couple seconds.
if the market is not sitting in a huge range on the big picture.
Yeah, big picture. Okay, yeah.
So yeah, I'm all about big picture, right? So I'm always back in the day when I used to trade full time, it's always zooming out, and then for example, this year is a completely hard to trade, right? You really just make a level here and then level there, and you more or less scalp in between 50-100 points, but nothing major you can expect. Once you have the big breakout like this year, then you can really swing it. Then you can really go for a swing, or the same goes for the downside here, because then you have the momentum, right? The market accumulated or distributed so much volume there, so much liquidity that it needs to get rid of, or hands are changing or repositioning. So there's just so much volatility and momentum in the back. And yeah, I prefer clear pictures, but that's the thing, right? You need to work with what the market is giving you, and this is why Steve is using his correlation system. This is a way to filter noisy markets, or at least join the markets that are more likely favorable and go in your direction. Right, what do we have here? So we have this, I'm sorry, we have this area, we have this area. So I would say that's a possible zone.
Yeah, a lot of touch points. Yeah,
a lot of touch points. Yeah. Then we have the trend line, downward slope. So what I want to see for a clear bullish signal: breakout, breakthrough, and then above it's a long. If the market cannot break through either to the trend line and goes down, it's a downside momentum for me. If it goes above, but is not capable to break above the resistance area here, then it might be a bounce to the downside. And this is how I play it, right? And we're looking here at 15 minutes. So then I would usually zoom in on the 3 minutes, 2 minutes, 5-minute chart, whatever you're most comfortable with, your eyes are trained to. And then I just want to see some kind of range. And then you basically just big picture, middle picture, and then you zoom in, and then you just find a pattern you like, whatever it is, range, triangles, ranges. And what always helps, and therefore we're preaching it so hard here in the show, correlations, right? Because it gives me a much clearer sense. So let's say the market will be sitting here and in this range, but I will see that S&P 500 or Dow Jones or both are already exploding. Then I have a much higher conviction to join the trade on the long side if I want to stick with Nasdaq at this point. And it gives me an indication that it might also go to their upside. And this is like increase your odds. And it's all about odds. It's all about your edge, increasing odds, understanding your edge, and understanding how you can compound and stack odds. It's actually a terminology from gambling, from what I heard, odds stacking, but it's how I like it to call it. So you just combine different odds together.
All right. And it works the same way with trading. Like similar, let's compare quickly blackjack to trading. Where in blackjack, card counters, sure, even though it is legal, but of course they're not favorable. And if, the boss man, they catch you, they kick you out the butt, it's still a legal way to gamble. They know how to make money, because what they do quickly is they test their hand with the dealer, and they know their bet sizing. So it's the same with markets, you guys. If you see an idea, don't jump all in right away into the idea. Test it out. See how the market's reacting, because then you become laser focused once you put a low risk on the table. And then if you see, let's say, NQ reacting a lot stronger than ES, then put a little more risk into NQ, because you've already tested your idea maybe on another index. And this is what I like to do. I test it out, and if it runs without me, and then I just take my profit. But if another index is much stronger, then I am shifting my bet sizing on strength. And it's the same what blackjack dealers do, but this blackjack players do. But this is not another discussion, maybe another lesson we could talk about, Henry. But I like that comparison when you compare blackjack to trading. You could in a way you could also compare poker to trading, but I like blackjack because the way they shift their bet sizing is, I think, much smarter than it is in poker.
Yeah, we can make a weekend edition.
It's good though. Like if you truly look at like the strategy of like card counters in blackjack, they lose on purpose, but when they lose, it's very small that they lose. And when they win, it's very big, and they double down. So yeah, it's very interesting.
So guys, next Friday coming up, visit Steve with a POV camera in Vegas.
I'll go to Vegas. Yeah,
sending our tails.
Yeah.
No, but I completely agree, and that's the thing, right? But by the end of the day, it doesn't matter if it's poker or if it's blackjack. It's all about understanding mathematics, understanding statistics, odds, how those things work, how you can combine them, and bring math in your direction. All right, S&P. So basically, this orange line here, it's our support area. I think we drew it on Thursday or Friday last week. So we perfectly accepted it. We're not able to break through. So support is support here. And as long as the markets, we actually also are currently sitting right in the middle of this trend line, but I'm not a big fan of it. I'm gonna delete it. Don't like it. I'm gonna draw a new one. This one here. Yeah, that's better. And then, and now some of you are asking, like, yeah, Henry, I'm an intraday trader. I don't care. And the thing is, you should care, because many times if you go long and you get a signal it's just like 5 points away from a major resistance area. Then you need to be super aware of the breakout, because many times, or more times than not, it's a false breakout or just a test or whatsoever. And so you need to be super cautious about that. And if you know, then you can even initiate a counter trend, right? You can even go like use a mean reversal strategy or whatever. So yeah, therefore, let's compare. Similar story as with NQ, both sitting right in the range.
I'm just going to quickly say, Henry, like, it's very important to know where you are on a longer scope.
Yeah.
Because if we are in the breakout area on the longer time frame, then maybe that shifts your strategy on the shorter time frame. But we're still in the range, that also like shifts your strategy. Because if we're in no man's land about to break out, and just be very wary that we could have see a lot of volatility on either direction. So yeah, that's always important to look at the macro side of things, you guys.
I think what many forget is that they always like, people need to be aware of the differences of different structures. So for example, let's make a nice example here. So let's say this trend line break on a daily. If you know that this trend line is happening, right, and the market bottomed here, the market have broken through his support area here, and you can even see it. I mean, this one is also quite nice. It has even a gap, right?
Henry, but we have
market open.
Yeah. Ding, ding, ding.
Ding, ding, ding. Yeah, let's quickly.
Where are you guys?
Yeah, let's quickly shift gears. Just zoom in 3-minute chart. Market looks bullish reaction for the time being. ES spiked up, Dow opened negative reaction, Russell's, Doji, gold. Yeah, it's actually, I mean, it's on some days you can talk forever, like today, because there's so much going on. I put it in the headline or in the description, like gold is rising, gold is popping, right? So quite a bullish development there. But nevertheless, just let's continue. So daily on the S&P. Maybe just one thing I want to say. If the market breaks out above this resistance area, then you will know there's a lot of liquidity sitting above, and a lot of momentum will be driven in for the upside momentum. And if you know, if you have this information, then you can take a much wider swing in terms of your profits than just scalp for the usual 20 ticks or 20 points. That would make sense if it's in a tight range, right? But if you know that here is like completely free, there's nothing to the left apart of this all-time high here. But apart of that, there's nothing sitting above. So you can expect some big movements, some big liquidity happening, some big things happen there. And then you can ride it out. And actually, I mean, I think we should make a video about that, so to have a specific topic. All right, Dow. Dow had the last couple of months its own character, and it really doesn't look pretty, but it fulfilled its purpose, right? Slow grind, small corrections, then small grind up. But yeah.
But it seems like it hit like 50% or maybe more, a little more. Maybe even the 618 on the fibs of the measured move, but slowly climbing that way, slowly squeezing out the bears.
Yeah, almost half. Yeah, and that's the thing, right? But I have to say, it looks like currently that it's making kind of flag, that it's building a possible flag. Yeah. So if it breaks above, bullish continuation pattern, guys, just be aware of that. Russell's support area. Actually, maybe we should move it to here. 1, 2, 3 for touches, somewhere like this. I think it would make more sense. But yeah, also bullish, right? It's what it was not able to go down really far, so still bullish momentum. Gold, I mean, we have been watching gold a lot the last 2 months. So I would say if gold can break through this 4,200 level, it might be a possible double bottom. You see, 1, 2.
Yeah.
So if it breaks above, it's a possible double bottom, and then the next target would be the resistance at 44.10. And if it breaks above, then we have a new bullish gold case. But for the time being, those are the 2 levels I would watch out for.
Yeah, it's still the summer months. Gold is in no rush, Henry. It's waiting for the fall months for the volume to kick in, the big guys to show their hand. Looks like it's just creating some supply, demand levels, range, and then we will see the real movement later on. So no surprise there. That's the thing with gold and commodities. They always die down during the summer months. Things never change.
And obviously, crude been an interesting case. And so yeah, let's see. Let's dive in. So 78.50 has been used as a level, and you see it on this little black candle, right? So it was not able to go through. So it was not able to fall down. It was basically created a range here, continuation range. I'm sure if we zoom in on the 1 hour chart, we will see a kind of full range mode here for 1, 2, 3 days. So build them sub momentum for the continuation move. For the time being, it's bullish. And as Steve already mentioned in the beginning, many news coming from Middle East, right? News all over the place, and it's horrible. It's horrible for the people. It's horrible for everyone involved, but it's also horrible for us as traders on a smaller scale. But it's like a pain in the butt to trade with this unexpected events.
Unexpected, but it's speaking of events and Middle East, we actually did have some news hit the tape about 30 minutes ago. I wanted to mention, but we'll just carry on. But I'll mention it afterwards. Where it was affecting oil and Nasdaq. But we did have some news from Trump about Iran shooting down some ships straight to Hormuz. So yeah, we did have a little impulse, but I'll talk about it later. Just want to add to that.
It just doesn't stop, right? And this is at one point it just becomes super annoying, to be honest. It just becomes super annoying because
Yeah.
I can imagine as a trader, you're sitting for 4 or 5 hours in a trade, and then a news comes out and it just like moves all the way back to 150 points in 1-2 minutes, and then stops you out either with a stop or break even or a trail stop, and then you're sitting there like, all right, is it negative? Is it neutral? Is it positive? And then more times than not, it just pops back up, right? And
Henry, don't give me that heart attack, because I used to be me, you guys, that days where I would sit in my trade for 4 or 5 hours, and majority of that time in a loss as well, and then it goes against me even more. But it's, you guys journal, and if you see that you're losing trades or 80 to 90% in a loss, maybe it's 80-90% in a loss for a reason of that time that you've been holding on. Because usually if it's sorry, like time wise, if you're in a loss for that long, then it's saying something about your strategy, So for me, I don't like to hold for longer than an hour. But there have been days, where I hold for 5-6 hours. But if I'm 5-6 hours in profit, that's a different story. But 5-6 hours in a loss, Henry, then that's something you guys got to journal.
It's draining. Yeah, it's draining.
Yeah.
No, but I think this is something that might be super hard for some of the traders who are really hitting for the big targets, and then it just all comes back within a couple of minutes, and you're basically sitting there for nothing. But yeah, all right. So yeah, what do we have? Yeah, it's still a bullish case. I mean, what can I say? It's we have actually plenty of stuff going on here, right? So yeah, it's like, it looks like a cheese, kind of, in a way. So it's like a pure
Cheese. Explain the cheese.
Yeah, like the good ones with many holes in it, with many gaps in it.
Swiss cheese.
Yeah, no, the Swiss cheese. Yeah, no. For the time being, I would at this point be aware of the gaps, but also don't just assume because there's a gap closed that it will turn around, right? Because for the time being, it's basically how many points, how many percentages are these? Yeah. So wow, it's already at top. It's already 33%. So if we have already a movement like this in commodities, then there's one rule that everyone should follow: never fight a commodities run, because especially commodities, they can trend forever. They can, like, with some stocks, if they're heavyweight, there might be an end to it. But for commodities, they can go up 10x, like 1,000% in a couple of months, and there's no fair value to it, because if the whole demand supply thing changed, then there's nothing you can do about it.
That's what we saw in silver. Like that was percentage wise. Like gold, not as much, but yeah, when you look at what silver was doing, how it squeezed against all-time high, people thought, okay, it's all-time high, lay some shorts. But yeah, we can quickly look at silver, how much higher it went, and yeah, it was a nasty move.
So yeah, just one thing I would add, right? So for example, on the stocks side of thing, especially with the big ones, you can play a mean reversal strategy with the gaps. But with commodities, my recommendation is for everyone who is not like a completely professional, always stay with the trend, always follow the trend. No recommendation, do your own thinking. Again, risk disclaimer, pure education and entertainment purposes. We are just discussing our own opinions and hope that some of you get a little bit better and help you with the trading. So, but please always only trade your own strategy, backtest them, do your own thinking. All right, our friend Wix. This is the Wix for me is really I talked about it already a month ago, where I said it doesn't make any sense. You have so much stuff going on geopolitically, and usually it was always a reason for Wix to spike up, but now it's basically completely become a suppression mechanism for the big guys to smash it with plenty of size.
Yeah.
And no, but again, I always like to see, always like to watch VIX, just what's going on. Actually, we have a level. I would say it's this one here. 19,600. So 19.
Yeah, 19.6. And yeah, this could be, keep this on your chart, you guys, because if VIX stays below this level, then clearly the market is not in fear mode at all. There's no fear, so the bullish case remains. So maybe keep that, set an alert there. And as long as we hold below 1960, bullish mode is still on for ES, for Dow, and eventually for NASDAQ to catch up.
And that's the thing, what I tried to say in the beginning, right? It doesn't matter your personal opinion or the opinion or whomever, specialist, analyst, whatsoever. They can talk all day long, but by the end of the day, big money is ruling the markets. And if they are, in their opinion, or maybe they even know that this thing is just temporary, then they are already pricing in the next moves. And they are basically just buying up the whole good prices inside the range and preparing themselves for the big picture, right?
Yeah.
So therefore be aware. Oh yeah, that's the one I want to talk about. Ooh, I've been watching it the whole last week. So yeah, we are.
So
guys,
how much are we down since the break-even level?
I'd say I think it's I think it's almost 20%. Let's say if it's 150, right? IPO 150. Yeah, so up to the bottom it was 20.6. And I have the feeling, because all the guys, they know what they're doing, right? So if a stock or index breaks 20%, then it's an official bearish territory. So my guess would be that they really fought and bought up the price of minus 20% in order to avoid the bearish headline. Oh, SpaceX is now in a bearish territory, right?
Yeah, exactly.
That's my.
It's all hype.
So that would be my guess at this point. And yeah, I mean, let's see, guys. In the beginning, when it popped up a month ago, we made some assumptions. That's our measured move down. 71.
Yeah, we're about 30%.
So I'm just saying, right? You never know. 20, we made 20. If we make another 30, we're almost there. No, but it's been an interesting case, right? So plenty of hype, many weak hands got into it, and let's see how it plays out.
The question is earnings. I'm really interested into earnings. It's first earnings. What it will either forecast and then confirm as the new numbers, Henry. So yeah, because
that's the thing. I think they will not they will mention revenues, but I think it will be more about the vision, right? Some data centers, and
well, now they're talking about space data centers, because like how they make their revenue. They have XAI. They have all the satellites for Starlink, for the Starlink internet for around the world. Okay, yeah, they are bringing in like hundreds of millions there. But this company is valued at $1 trillion, Henry. So, a couple satellites is not going to be enough, Henry. So, but if they bring in a space data center, that could turn tables a little bit. We'll see.
Yeah, I mean, if they can bring in a self-sufficient space data center that is basically just completely being fueled by solar, and you don't have any waste that goes in the water and stuff like that, then it's going to be a game changer. But for the time being,
all in.
No financial advice, guys. But
sorry, no financial advice here. Sorry, guys.
No, but I mean, Steve and I we talked about it right in the beginning, where we said, for sure, we don't know, but it seems overhyped. It seems way too high for what it is. And no, we both don't deny it's a great company. It's amazing what Musk has done there, but still there need to be somehow of a rationale that you can satisfy those kind of evaluations, But I mean, that's the thing, right? With all the monetary policy and with all the high flyers. 10 years ago, if you had a company valued at 50 billion, you were the man. Now, if you have a company 100 billion, oh, you're a startup, right? So what's your plans when you grow up? So the trillion now is what used to be 20 years ago, like the 100 billion or something like that.
Yeah, that's crazy. Yeah, the value of money, inflation, the printing. But yeah, we're definitely in a new age right now. before we were in the digital age, now we're in the AI age. So everything seems to be overvalued, Henry.
Here, guys, some fun fact. I mean, we talked about it 2 weeks ago. Apple announces price hikes, market sells off, and I've been already thinking like, oh, okay, it's going to be, it's more expensive. And then I've been like, oh, but actually, I think people will still buy it. I think it's just a minority
I
of
couldn't
people
believe it.
who will actually not buy it. So my thinking was like, okay, most likely it will probably pop up, and then it's really like you can see the shift.
I couldn't believe it, Henry. I couldn't. And we were talking about this, how the price shift increasing, but then the buyers are like, no, demand is still there. And I know Henry, he personally owns Apple products, so he's happy, right? So
Yeah, I mean, okay, that's another discussion we can have. I also used to have a couple of Android things, but to be honest, Apple is just more convenient. But
oh, there you go,
Android,
you guys. There you go. There's he's a happy customer. So
yeah, so. But will I pay $200 more? Nah, I'm not sure about that. Maybe. I mean, that's actually the thing, right? It might, but we will see it over the next couple of quarters. If they were not able to bring up new innovative products that can actually extend the cycle change of new products, because customers then saying, all right, it's rather expensive and my phone is still good, so I'm gonna keep it for 1 year longer, right? So instead of changing every 2 or 3 years, they're gonna change maybe every 4 or 5 years. So I'm curious to see how it's gonna play out in the long term, but for the short term, nobody cares, right? And Apple still can, in 2 years, they can still cut the price, and then if the market is still bullish, then gonna pop again because, hey, cheaper prices, more demand. So, you see, guys, Steve was shaking his head, but that's how the whole thing works. And again, it doesn't matter what Steve and I are thinking, and if we are shaking our heads or not. It's just the reality of it. It's just how the market works. It's in the market. To be honest, the market is super bullish bias to the upside. Because
exactly. Look at the reaction. That's all that matters. The reaction from the market. So.
All right, guys. Let me maybe one more thing. Let's quickly see. This is the one actually to watch out for. So we are still. I think this. I think I drew it somewhere here in the middle of June, plus minus. So it's like almost 3 weeks old, this chart, and you see how perfectly we accepted our upwards channel. So if this continues, and why is it drifting higher? Well, the 2-year yield is basically the monetary outlook, and also some headline inflation priced in, right? So once oil is rising, oil is on the rise, as you have all seen, and the inflation and the monetary policy is still hawkish or neutral to hawkish, then those things will rise. And 10 years also upward looking. So yeah, what does it mean for you? It gets more and more expensive for the companies to refinance, to debt finance. It's also be more complicated for the consumers on some ends. And just be aware of it. Don't ignore it completely. And as you can see, once we break the 2025 level, the next goal is here. And I can tell you one thing. If we start approaching 5%, then things will start to boil. And then we will start to see some intervention from the White House, from the Fed, and from every other corner, because they don't want to be the 2-year sitting at 5%. And considering the amount of debt the US is sitting on, and most of it is financed on short-term finance, so it needs to be refinanced. Those changes might not seem like much, but I can tell you it's a lot of money if you're talking about trillions of dollars that you need to refinance.
Yeah, and it may also make sense why indices are stuck in a range now, Henry, because we are adding a little extra pressure now with the yields, with crude oil, energy prices. So it also makes sense why Nasdaq and S&P haven't really broken out to the new levels, to the upside, because there's a lot of uncertainty right now. And if the 10-year and if oil doesn't shift away from its bullish pattern, then we all know what's going to happen next. So let's just wait and see, because a lot of times, yeah, like the bonds, the 2-year, the 10-year can be forward looking to see what's really going to happen with risk on assets. Because remember, guys, these are risk on, not risk off. So what we like to do is quickly let's dive into the risk off headline that came from Truth Social. This came in a few minutes after we started the stream, you guys, but I wanted to just we would just want to focus on the macro first and then what's going on. Yeah, currently right now. So what happened, you guys? Seems like Trump's speaking about some shootings at a ship, Strait of Hormuz. And from this point forward, he's saying that U.S. will bomb one bridge or power plant going forward. So you guys, a lot of these warnings can be tied with, critical oil choke points, geopolitical. This ramps up the risk. Also, with oil spiking and safe haven assets with the dollar. So, a lot of things connected with this. But look how the market reacted, Henry, which is interesting because people would think this was bearish. And originally, if you go on the 1 minute, yes, it had a bearish dive. And this is where traders get caught, you guys, because you probably went short at the initial reaction. You possibly could have caught a few points. Total move was about 85 points. However, this move happened so quickly where the algorithms got into it. And the big players, what they actually use, Henry, is they could have maybe used this to close their shorts, which is why we're seeing a bounce now. And the bounce is now total over 180 points. 180 points bounce. So you could say either this was a good area to buy or this was a good headline for liquidity for a lot of the shorts to exit. And whenever we have that, you can see a squeeze to the upside. So remember that, you guys, don't blindly move just because you see a strong headline, the initial reaction. Always wait for the confirmation. So this is going to be my pivot area of the day because this came about 30 minutes before New York Open. It looks like New York Open is reacting strongly, interesting enough, even though it was a bearish headline, Henry. And yeah, we're up about 180 points. Let's just measure out the pivots, you guys, before we end the stream. Because, yeah, I had another pivot that came pre-market. We had some Saudi news, but because we had this fresh headline, I think this is more important because it's more recent. We're seeing a clear rejection of this bearish level, acted as resistance, now support 29,020, you guys. Keep this level in mind. Let's just map this out. Zoom out on the longer time frame and see our risk to the downside. And I see a nice New York Open down here from Friday. This is also a weekly level. And yeah, so just measure this out, 28,600. Not saying we could fall down to this point, you guys, but just keep this in mind. This is about 400 points. So yeah, the gap is pretty big for today. Given the levels, let me just quickly look. Monday's New York Open. Yeah, Monday's beautiful. Monday's New York Open lines up perfectly with today's headline risk. And this is how it happens. So I want to make sure all the pivots make sense. So because today's impulse of the day lines up perfectly with another strong volume node, I will keep it there. And what I will do now is now measure the risk to the upside. So the measured move. Yes. You can't make this up, you guys. The measured move will be taking out today's highs. So just keep that in mind. This is pre-market. Not only the pre-market session, but also the close from yesterday. So there's actually a lot of volume that entered the market at this level. So, if we take this out, this could be the risk to the upside. And let's map this out. This is right around 29,000. Let's just call it 29,420 to the upside. And yeah, we're almost halfway there, you guys. This is how fast market moves. For me, I'm always looking for entries about 30 to 45 minutes after open anyway. But because we've already taken out half of the measured move, that's something, I make note of. Journal live in my trading, my thoughts, what's happening with markets, and also the ranking, you guys. What is going on? So this is the ranking I had pre-market with Nasdaq being the weakest, but given that Nasdaq had a strong reaction after that impulse, let's just quickly look at the ratios and see if the ranking is still updated. Yeah, so as you can see before, comparing it to ES, yeah, Nasdaq is still much weaker, but it's about to take out the daily open. But for now, yeah, ES is still stronger. Dow Jones is much stronger, which is why it's first on the list. So yeah, NQ to Dow Jones, still very weak. But if you look at Russell seems to be one of the weaker plays of today as we are entering into break-even area. So what I'll do is I'll just quickly readjust you guys. For me, so far, what I'm looking at is Russell 2000 is actually the weakest pair. It says coming up to break-even, but I will probably wait another 15, 30 minutes to get that extra confirmation. But for now, it seems like the two oddballs, the two that not too many people look at, which they should be looking at, you guys, is where you find the spread, the rotation in and out of indices, and this is what we're seeing. You don't see it too often because a lot of times you see ES and NQ tightly together, or Dow Jones and Russell 2000. But now we're seeing a gap between one of the oldest indices in the book, and that's Dow Jones. It's been around for a long time, and now we're seeing small cap stocks that are not really related as much to the Meg 7 or the Meg 8. SpaceX is Russell 2000, and that's the weakest play of the day, and that's what I'm looking at. So I will definitely be looking to put on some ideas on these two indices for today, and this is what a lot of people miss. And they sometimes think, what, the setup worked out for a few weeks or a few months, and then all of a sudden ES and Nasdaq are stuck in a range. Why is that? It's because now there's rotation happening out of those indices and into these other heavy hitters. Sure, Russell and Dow Jones do not present as much volume, but they still present enough volume, much more volume than any single stocks out there. So this is what I'm looking at, you guys. We just have a few minutes left with Dow Jones first and Russell last. What do you think, Henry?
Yeah, just one thing to add. Maybe another term for people to better understand the whole rotation thing is basically imagine money flows. It's like a balloon, right? You have a limited amount of air that you blow in, and then the balloon extends. Once it's too full, it's in a perfect scenario. You made an additional money on it, and then it's like, all right, it was a good run. Let's take the money out. Let's grab the profits and put it somewhere that was not as good running as the other indices. And this is like how this whole rotation money flow system works. It's basically systems, algos, phones, hedge funds. They have whole desks set up with those kind of arbitrage systems, and they're looking like at this point it's intraday, right? So we don't look at 10% and difference in spread. We're looking at 1%, 1.5%, half a percent of a difference. But if you can make this differences often enough, and you can play the spread often enough, then it's a valuable strategy. And so therefore you have those kind of money flow, money shifts, and those systems, they evaluate daily, right? What was like all kind of news, macro, yields, oil, inflation expectation, whatever, 1,000 different parameters. Maybe even spread itself, the difference. All right, it was running too hot over XYZ days, right? Over the last 3-5 days. Let's grab it off. So fully automated based on statistics. So there's so many ways to play it, but this is what I like about our stream with Steve, that I show you like the charts, and Steve is basically also combining charts, but with his money flows. And it's a proven system. If you want to learn more about it, then visit description is in the link down below. Visit Steve's profiles, subscribe to his newsletter. Otherwise, follow and subscribe to Podia, so you get notified once we go online. And yeah, let us know if you have any questions, or reach out either to Steve or to myself. We're always eager and happy to help where we can. Yeah.
Thank you, everyone. Like and subscribe. Support us to continue doing this. Henry and I, every single day, there's so much information to dissolve. We're always here. Give us your questions, you guys, whether it's live or in the comments. We're always here to help. as well as Courteous Discord. A lot of active traders there. Never feel alone. Connect with others that are trading similar assets as yourself, or maybe different assets, gold and silver, which you'd like to learn as well. So that's the whole goal of this, you guys. This is the live read from today. Hopefully it helped. You can also drop your levels, what you guys are looking at, and if you're monitoring the 3 p.m. Trump speech going on later on, as well as Tesla and Google earnings, you guys. So yeah, just keep that in mind. Be aware.
All right, everyone. Trade safely, and see you all tomorrow at 9 a.m. Eastern Time.
Perfect. Thanks, Henry. Thanks, everyone.
Goodbye. Thanks, Steve.